Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor. I've got about £3.5 million worth of property in the UK, and today I'm answering one of the questions that I'm asked all the time. Is buy-to-let in the UK dead? Now, obviously the answer is never going to be as straightforward or as simple as a yes or no. So today, in this video, what I'm going to do is go through what I see as the tailwinds, i.e. the things that we have optimism about, and the headwinds and things that we maybe feel a little bit more pessimistic about. And then I'm going to draw a conclusion from that using my experience of over a decade of investing in UK property, of what I believe the next decade looks like and where to find opportunity. Now, if you like this sort of video, if you like this sort of content, please give this video a big like. It really does help me out in the algorithm. And if you haven't already subscribed, 33% of people have watched this video, but that means 67% have not. So please consider subscribing. And if you do, you're entitled to an absolutely free one-to-one call. Just look in the description, there'll be a link. You can book a call one-to-one with me, absolutely free of charge. I have nothing to sell to you. I'm just connecting with my audience. So let's get into the video. Let's talk about, is buy-to-let in the UK dead? Now, the first thing I think we should do is look at the headwinds, the reasons that we feel a little bit pessimistic about the market. Over the last 5 years, I would say these are the main things that we worry about. Number one, there is a lack of supply. Less properties are being transacted than in previous years, certainly before the pandemic. So a lack of supply is certainly one of the issues that we face when we're investors. Number two, interest rates. Now, when I was investing before the pandemic, I would be securing a buy-to-let mortgage between 2 and 3%. Right now, I'm securing between 6 and 7%. So you can see that the interest payment on those buy-to-let mortgages has more than doubled over the last few years. And on my entire portfolio, at the end of January, my last mortgage of £350,000 moves over from 3.25% to 6.75%. More than doubling the payment from 900 to about 2,100. You can see that there is a big difference in those two numbers. So interest rates is certainly a factor for us to feel a little bit pessimistic about UK buy-to-let. Number three, a Labour government coming into power and wanting more for renters' rights. Now, we don't necessarily know how this might unfold over the next 5 years, but a socialist government normally will push a more renters' rights agenda. Now, that's not always the case, and of course the Conservatives may well do things for renters as well. But generally speaking, the more socialist, the more rights people will be receiving, because that's kind of their agenda. Now, I'm not a politician, I'm a capitalist, so I don't really care about any of those politics, left or right. I just deal with the board that's in front of me. Now let's talk about the positives, because there are some positives. First of all, to mitigate these mortgage rates increasing, rents have gone up. Rents have gone up by about 20 to 30% over the last 5 years. So that's a fantastic move. It covers the difference in mortgage payments, or almost covers the difference in mortgage payments. Maybe not quite, and there are areas of the country where there's a significant difference between the rent and the mortgage payment, and we'll get onto that later, because that is the key thing when I'm answering this overriding question. Number two, interest rates are starting to fall. So if we go back to July, we went from 5.25%. We're currently sitting at a Bank of England rate of 4.75%. And current predictions, look, these are open to change. We all know what's going on in the bond markets at the moment. It's quite possible that interest rates will be higher for longer, but the current predictions are around 3.75% by the end of 2025. And then the last thing that I think we have a bit of optimism about as investors is when the market is a little bit tight and when people are feeling a little bit pessimistic in general. And this could have easily been a reason for pessimism rather than optimism, because when the economy does badly, maybe investors should be pessimistic. But no, that's not my thought. The more pessimistic the general public are, the more optimistic I become, because I'm able to negotiate a discount. If there's a rise in unemployment, it's highly possible that people will have lost their jobs and require to sell their home quickly as they are unable to make mortgage payments. There are all these opportunities that come around. Now, you might say that makes me a greedy landlord or a greedy capitalist. I'm just a capitalist, and of course, by its nature, capitalists are greedy. Of course, I admit to that. But all I'm always trying to do is solve two problems. You want to sell your property, I want to buy it at the right price and make money. Cool, we're in line with what we're trying to do. Nobody's trying to force anybody to do anything. It's their circumstances that may have forced this. So in my experience, the more pessimistic the economy becomes, the more optimistic I can be about opportunities in negotiating a good deal for myself. Now let's talk a little bit about the regional differences, because this is the key thing in this. I've got in front of me on the left a chart from Zoopla that shows the yield, the gross yield, i.e. the percentage return you would get on a property if you bought in cash. And obviously this generally will then transpose into an ROI if you buy with a mortgage. But you're looking at all of the top spots being up north. And the reason is that these interest rates have really hit down south much harder. Let's give you an example. Let's say a 3-bedroom property in Sheffield. Have a look, you can buy plenty for £150,000. Now, if you were to have a £100,000 mortgage on that, and at 3% you're paying £3,000 a year, or £250 a month, and then that doubles to 6%, well, the nominal difference just isn't that great. And the rent was able to increase to catch up and close that gap. Down south, this is the problem. The rent wasn't able to increase because affordability came in. People couldn't afford to go from paying £2,000 to £3,000 a month for their rental property. So now we're in a position where actually the rents have not caught up down south to cover that additional mortgage payment. And that makes the south very unattractive to me. Now this is all really played out when you look at the regional variances. And if you look at anything like the Halifax House Price Index, the Nationwide Report, the Rightmove or the Zoopla, the areas that are growing are the areas with the cheaper properties. So now I'm going to answer the big question at the beginning of this video. Is buy-to-let dead? Down south right now, it is dead and buried. Don't even look, in my opinion. Anything lower than Birmingham, I am not interested. But as soon as I get to that area, probably Nottingham and above, where I can see that there is a good positive cash flow of above 8%, and that's entirely possible right now. 8 to 12% on a single let, 20 to 35% on a HMO. Serviced accommodation, I don't really touch because I think there's a lot of risks involved, but I know people who are, and they're getting 35 to 45%. Again, more work in those sort of deals. But I would say 8 to 12, 20 to 30, you know, those sort of returns with single lets and HMOs, the areas that I'm involved in, entirely possible right now. And furthermore, it's entirely possible to secure a discount of 10 to 15%. If you're able to couple those two things together, you have insulation against the downside. So if property prices drop, you've already baked in 10 to 15%. Great. If they rise, you've bought this big chunk of equity at the very beginning of your purchase. So if it's entirely possible, in 2 years, you get all your money back out. I think right now, Northern property, and this wasn't the case 5 years ago, I was still buying down south. Northern property right now is the only place I would buy. So buy to let for me is dead from Birmingham below, and it's alive and kicking and thriving above that line. What are your thoughts though, guys? I am really, really interested. And I know this video will be as divisive as the line I've just drawn through the country, but I genuinely believe that there are areas of massive opportunity and there are areas where you could stand to lose a lot of money. I'll see you on the next video, guys. Like and subscribe, book your calls, and I can't wait to see you on the next video. Cheers, guys.